Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A third bullish long white Mariposa and bullish white soldier pattern on Friday, the highest close since June 2022. The market pushed through the congestion at the August 22 high at 105.49 and then further 2014 base congestion between 106.79 to 108.62. Through a clear area, bar some congestion at 110.68, all the way to test the slowly rising dark blue neckline extension, currently 114.23 of the July to November 23 head and shoulders top, where prices peaked and closed a little underneath. Further up, we have a congestion area between 115.70 to 117.31, made up from the 2014 high at 115.70, the September 2013 high at 116.53, and the August 2013 high at 117.31. However, the most important piece of resistance is further up, and is the bright red middle tine, currently at 120.26 of the big 2020 to 2025 bullish shift pitchfork. This bright red tine is located just above a significant congestion area between 119.19 to 119.99. Looking at the bigger picture, we have a gap below from late February between 93.80 to 95.20, which we've only so far seen one attempt to try and fill and now look destined to be left alone for quite some time. Additionally, a lot further down is the mid-March lower 81.16, which could have been a component of a possible huge March-based double top pattern. However, this is no longer the case, and the idea of a double top pattern is now retired and instead replaced with a possible March-based ascending triangle pattern idea, utilizing the late February to date uptrend, which is currently 101.43, as a base, and the bright red middle tine above as the top, the upper trend line. However, the bright red middle tine, if it halts the market, could also be seen as part of a very, very, very large possible triple top pattern, or even a really large bullish halfway hesitation pattern. It all depends on the action at that bright red middle tine. So far today, higher open just above the dark blue neckline and utilizing it as a base to penetrate, but not as yet push through the overhead congestion between 115.70 to 117.31. Spot gold. An immediate countering bullish harami on Friday after the previous session's bearish engulfing pattern. Prices opened a little higher, but still under the Fibonacci congestion zone between 44.03 to 44.35, consisting of a pair of close together 50% Fibonacci lines of the May 25 to January 26 move at 44.20 and the October 25 to January 26 moves at 44.35, but pushed up through it as far as the next lesser congestion at 45.39 before pulling back a bit. Overhead we have the mid-September 25 to January 26 50% Fibonacci line at 46.03 and a somewhat interesting combination of the rising mauve medium moving average, currently 46.36, and the bright red middle tine, currently 46.61, of the significant late January to start of March bearish shift pitchfork. This is now the main pattern here. Finally, we have been close, but with only one single close below, to triggering of a really big January to March double top pattern, an Adam and Eve type. The trigger would be consecutive closes under 44.03, which we have pierced and closed right on. And pierced quite a bit actually and closed right on, and only one time under, but as yet not triggered. Now, so far today, down to the pair of 50% Fibonacci lines below and up to the lesser Fibonacci line at 45.39. And back then up testing the top side, though we've seen little result as yet. Bitcoin. An indecisive spinning top on Sunday after the previous session's indecisive doji cross. Okay, yes. Yes, we have closed for a second consecutive time below the lower dark blue channel line for the start of February to date bull channel, as well as for a number of sessions below the bright red neckline extension, which is currently 68.071 of the significant August 21 to January 22 head and shoulders top. However, I'm not yet willing to call this a break below the bull channel. What you may ask, well, why? Well, it's because the nature of the patterns created, which were indecisive patterns, a pair of them, whilst these may prompt some to action and looking for a bearish move lower, for me, they would rather urge caution and just in case. Beyond the bright red neckline extension, we have resistance at 67.058 and 68.977, and especially at the 50% Fibonacci line of November 22 to October 25 move at 70.929. Whilst going below, we have the very interesting 50% absolute Fibonacci line at 63.129. Going back to this bull channel, which I'm going to call it's now, where is it, 67.058 up to 76.197. Going back to this dark blue bull channel, this pattern's actions continue to raise the question as to whether this is a potential halfway hesitation for a much lower move of the market or a potential basing action for higher prices. Finally, we still have in the bigger picture just about hanging on a very large October 25 to date bearish halfway hesitation. The primary and secondary targets for this pattern have already been achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone. I was and I continue to be on the verge of retiring this target unless, and I quote, unless we see some strong and distinct moves lower very soon, end of quote. Now, so far today, a reactionary move back up and based on that April 2021 high at 64.99, but capped by the October 2021 high and a dark blue lower bull channel line, the breached lower bull channel line. It's actually acting more as an attractor than a resistance at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.